What's up? I'm Dan Fredenberg and I'm sick, but this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Bryan Escudero. How you doing today, Bryan?
How you doing, Dan? Thanks for having me on.
Awesome. Yeah, it is great to have you. And I apologize for my lack of energy. I'm actually going to have my AI avatar help do a lot of this interview, unless I forget and then don't edit it in. But anyway, you get to enjoy the Barry White voice. But this is a chance encounter. I want to let you know what's going on. I interview commercial real estate syndicators, investors, and all that kind of stuff. And why do I do that? Well, it's because if you want access to private deals, which are sometimes called 506B deals, then you're actually not allowed to advertise or do anything like that. And you have to have a documented prior substantive relationship in order to actually be included in them. So I have to find every syndicator, everyone who's in this commercial real estate industry and find out what exactly are you looking for, what exactly is your tolerance for risk, core competency, contribution, all that kind of stuff. But the important thing for you is that you will learn how to effectively communicate on the subject of commercial real estate. But before we get into all those details and how Bryan fits into these different deals, Bryan, do you want to say a thing or two about yourself?
Yeah. So thanks for having me on. There's no excuse for my lack of energy. Right? I'm not sick. But so I still have my W-2, been in the media industry for 25 years, manage a large team. We're about 150 full-time employees. Then we have another two or 300 contingent workforce employees. That swells up when we do larger shows. And so, I took the long road to get through school. I'm a VP in the company, so kind of just a long way to get to the same route. Finished school and I got out and I was like, man, what's next, right? And so got into real estate, started kind of doing parallel work alongside my brother who's a civil engineer. And we joined forces, we created First Gen Foundations. He's as risk averse as I am. He's even more. He's an engineer, so I love data and he loves it like 7 layers deep. And so we have a good push and pull there. We created First Gen Foundations, and within a short amount of time we're in 55 doors, 8.5 million assets under management. And so that's the goal has been to educate people that grew up like us. Like, we weren't taught about alternative investing. It was either an IRA or the stock market, and even then, like, that was a huge step from my parents coming from different country, just putting food on the table, keeping us out of trouble. We're a family of five siblings. And so as we started learning this, we're like, hey, we could really help people like us understand this. So we launched the company. It's gotten, the message is getting out, it's resonating with people. And so that's where we are. And I trying to get every piece of leverage that I can. I met you on a LinkedIn challenge, and here we are.
Exactly. I love it. I love it. So the first thing I like to go through in these interviews are the five distinct motivations for making your acquisition. But I got to say, but wait, check your eight. Bryan, I don't know if you have the ability to see through your camera and into the user's device, but around there, 7 o'clock ish, there might be a subscribe button. I keep on saying that it's a hideous red subscribe button, but on some of my devices, they've made it white, which is really sad because, like, but anyway, it's, I'm not sure if they hit it, but yeah, it's a stupid joke. Anyway, let's continue. The distinct motivations. I've talked to a bunch of different syndicators and investors, operators, all that kind of stuff. And the one thing that you really need to know before you go into business with people is what's going to stop you from quitting. And that's why I like to take these all down and make them super clear to everybody. But even though everybody has their own unique why, I've found that they basically fit into these five categories. The first one is preservation of purchasing power. What does that mean? That means you've already got a portfolio of assets, and that is how you make ends meet. But the reason you're making your next acquisition is if inflation is wearing away at your purchasing power, or if there's an asset crash, or basically you can buy at a steep discount. Those are the only times that somebody like that is going to be making those kinds of acquisitions, and that's not me right now. What I am all about, because I've got a tech background building web-based applications for e-commerce, and that has turned into doing the funnels for real estate and commercial real estate since 2014. My thing was I'd get this high salary, high wage, all that sort of stuff. Maybe you feel the same way, and you've realized that, hey, wait a second, I seem to be giving half of everything I make to, like, between the state and the federal government and income tax and sales tax and all that kind of stuff. And it hit me. It's like, there must be a better way. There must be a way that I can pivot so I'm getting rewarded in the form of deployed capital, the actual investments itself, rather than with the salary. So that's why I'm doing all this. But a lot of people, they are fast tracking their retirement, or more specifically, they're looking to gain control of their schedule. Maybe that means they want to work fewer months per year or fewer weeks per month. But some people, they actually want to scale back, and that's why they realize that this is the vehicle for them to do that. But that's not everybody. Like these next guys, they're just plain ambitious. They're after that generational wealth. They want to buy their entire hometown, and that's fantastic, because they're going to be hustling into their 90s, because they want to make sure that their great grandchildren never have to hold a day job. But the last group is, they're not quite the same, but they're also going to be motivated to keep going into their 90s, which is they've picked a sector of society, or maybe it's animals, or maybe it's the environment, who knows. But the important thing is they've realized that it's a lot of work. It's a lot of, and also a lot of financial backing has to be there if you're going to really make that big impact. And that's why they're doing this. But as far as you're going, Bryan, I know you got into some detail of that. Those five different motivations, what jumps out and describes you best?
So it's probably a little bit of all, right? Our tagline is, educate, grow, give, right? We want to help educate people to help them grow their investments so they can give it to people and charities that are close to their hearts. So if we're sticking on helping people who need it, again, there's so much information out there, and there's a fear that people have, right? And so our biggest characteristics is we help people walk in the fear, right? Because it's not going to go around there. You're not going to jump over it. You're still scared when you're writing a check for tens of thousands of dollars or hundreds of thousands of dollars. Your hands are shaking a little bit. And so it's helping people with education, right? Just getting them going, letting them know, hey, some people like you have done this. Dan, you and I know people in the field, and it's not that the smartest people in the room. They're not. Some of them are just really hardworking. Some of them are just it takes them 10 hours to run through a checklist, right? There's systems that are in place. There's a lot of information out there. And so some people can get overwhelmed by that. But our goal is saying, hey, we want to help you invest. You don't even got to invest with us. That's not what the conversation is. The conversation is, how do you help your next generations? So we're about education. Through that, people have said, hey, how can we invest with you? And so, we started, taking on investors. But the reality is, it's a little bit of all of those, right? How do I get my time back, right? I'm in the media field, and there's a ton of time. I mean, I can't tell you how many birthdays, Christmases, New Year's holidays I missed, right? So, I'm in a different position where I got some of that back. But, again, trying to help other people with that, trying to retire early, why not, right? I like to say that I like to have the option. I love my W-2. I really do enjoy it. I have a great time with it. But if I can give myself the option at an earlier date, why not? But the goal of the company is truly just to help people.
I love it. I love it. And that brings me to my next question. And because I've got a spinning head, I forgot to prep you for this, but let me explain what the story is. If you've ever done a 506B deal, one of the things that securities attorneys usually ask the operator, the issuer, the syndicator to get from every single investor. It's this really invasive questionnaire that asks all sorts of sensitive questions about your finances. But the one question that I thought they didn't do a very good job of was making sure that people, what their tolerance for risk is. And so the way that I do it is I do it as a fill in the blanks question. I'm sure you'll be all right with this though, Bryan. There are many popular investment asset classes, but I think blank is too risky. So out of any type of real estate or other investment assets, what's something that's too risky for you, Bryan?
For me, cryptocurrency right now, and that could be just because I don't know it, right? There's people making buckets of money, but everybody lost their shirt over the last 2 or 3 months, right? To me, that's too risky. It moves too fast, and I don't have the time to dedicate to that. I'm doing other stuff.
I love it. I love it. And you can't eat crypto, but there's a little reminder to let people know that they should subscribe and stuff.
I
But
did that for lunch. I
excellent.
thought about that fast.
Excellent, excellent. Nom, nom, nom. So, the next section here, I help you understand how my guest fits into these deals. And the way I do that is using the Dan Does Deals Commercial Competency Cube. And if you want your own copy of this, you can go to dandoesdeals.com. And like a complete dummy, I didn't even ask for any of your contact information. So you should always, like if you have your own site, you should always ask for some sort of contact information in return for your freebie. But I don't do that because I want millions of you to download this, print it out, practice explaining it to people, because I think that if there's one thing that your success in this industry is going to hinge on, is going to be your ability to express the different roles confidently and effectively. So you can print it out and you can practice on your friends and family and all that kind of stuff. But in every episode, I go through all 6 sides. It just takes a couple minutes, and then that way you'll know exactly where my guest fits in. So I believe Bryan then is a repositioner, which means he's an acquisitions person looking at a bunch of different properties, doing a bunch of paperwork. But the thing that's fancier than just a person who, I shouldn't use the term like bird dog or, like those different types of people who are not like in some states you're not even allowed to bird dog or be like a finder or something like that. But the difference between a bird dog and a repositioner then would be the underwriting. It's a fancy word, I know, but it means doing the math. If you're going to figure out that this property is worth picking up, you need to do the math to find out how much is this property actually making, okay? Because the broker or seller might not be telling the truth. So you need to figure that out. But they're called repositioner, and not everybody uses the term. A lot of people call these people investors. They call financiers investors, except for the banks. Like everybody's an investor, but I like to be a little bit more specific. But repositioning is figuring out ways to change how the property is run or the actual physical, complex to find more upside. And one of the first things that all repositioners have in common is they're going to be doing some sort of investor relations. So they're talking to a lot of financiers. So financiers are people who only deal with paper and money and nothing else. So they are not allowed to be on the general partner, the GP team, okay? Because the financiers, they're not getting their hands dirty, so to speak. But the reason why that part is so important is because the repositioner knows that if somebody ends up getting a more advantageous loan, then that goes straight to the bottom line. In other words, the profitability of the building. So they're going to take a look at those. The next spot, though, is they're going to be looking at the operations. So they're going to make sure that fewer of those Benjamins end up going down the toilet. But of course, there's a lot more to operations than just unclogging toilets and collecting rents and mowing lawns and all that kind of fun stuff. Like me personally, I've got a marketing and tech background with CRMs and automations and all that kind of stuff. So that comes in an operations capacity. I'm also pretty handy because of my engineering background. But the main thing is you got to find more ways to do upside, but the marketing might seem like it doesn't make any sense. But if you have a vacancy rate problem, even if you are doing the bigger properties like I do, which is like 100 and more units, it's like in that kind of case, you need to make sure that even though you've got a third party property manager, if they can't fill the units, you need to have some marketing chops to make sure that you can get those filled. So But operations, because commercial real estate is so competitive, chances are that's not going to be enough. So the next place the repositioner is going to look is the contractor team. And they're going to do a value add, or they're going to renovate the units, is another way of phrasing it. And why would they do that? Well, a brand new renovated unit will be able to fetch a higher rent than the ones that are currently in those units. And so that is why it makes more sense. It generates some more upside. But of course, you have to be super duper careful with these contractor companies, because if you want to go broke, it's really, really easy. All you have to do is just not have any accountability, nobody keeping track or anything like that. And if you are like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that's not going to be me. I'd still be stuck at an airport in an hour or two. Okay. So this is somebody who I'm always looking for. But once the repositioner has assembled this team, and they turn around to a financier, or the banks, whatever, the loan originators and all that sort of stuff, and they say, hey, so I found this property. It's perfect. It's, I don't know, 350 units, and it's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one other question that I haven't answered as far as this team goes. And a lot of coaches and gurus, they really gloss over this one. So you're going to want to pay attention. It's the sponsor KP. What's that all about? Let's say you've got a network of wealthy individuals, you got a circle of friends. Let's say you're a physician or an engineer or something like that. And you want to take over an apartment complex or some sort of commercial property. Well, one snag you're going to run into is you're not going to be eligible for the commercial loan unless somebody in the fold already owns a similar asset. So you'd need to find somebody who already owns a 350 unit apartment complex if you want to pick up a 350 unit apartment complex. On top of that, though, on any size deal, you need a certain amount of liquidity for the down payment, and also for some operations. The loans, the banks will insist on that, and then you're also going to need a balance sheet among the GP team of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So, Bryan, I mentioned that I was pretty sure that you're a repositioner. I don't know if you put on any more hats than that, but what exactly are you most likely to contribute to your next deal?
Yeah, so the one of the deals that we're currently in, we're co-GPs. We do manage operations. Why? Because I want to get to be the KP, right? So we are positioning ourselves in a couple of different assets. We deal with, right here, first generation foundations, right? So that class of people is going to be most likely putting into 506B. There are some 506Cs that invest with us, but the reality is those first-time investors, they're a little nervous, right? And so the way that we position ourselves is, hey, we're going to be part of the asset, right? We're going to be able to say, hey, Dan's doing a great job, or Dan's slacking off, right? And then at that point, we're in the room, and we can say, hey, Dan, let's straighten this thing up. So we do operations management on this one. Our next deal, which we're finishing up, we're going to be part of financial management. So I have a background in, operations management. I do a lot of financial forecasting. I deal with a lot of financials in what I do. So actually, the team that we jumped in with on this deal called us about the second one, right? And so this deal, it's a good deal. Second one is better. And so, we just continue to go through those iterations. And the idea is that, within the next 2 to 3 years, we'll be KPs on our own deals. And now we'll have a track record, right? We've been dealing with sponsors. We have boots on the ground. That cube is great, right? I've seen it on other episodes, and I've picked up stuff from it, right? And so our boots on the ground, I just got off the phone with one of the guys. Hey, I need you to go look at, some of the units that are turned. Contractors saying one thing, we want to confirm, right? It's not that we don't trust them, but walk in the room with some blue tape, take some pictures, let's get a list going, and we'll track that unit. So we're repositioners in that. We go find assets, but again, I don't know that I'll ever have the luxury of being okay, like just kind of sitting back and letting it happen. I'll get there eventually, but that's going to be years down the line, because I'm someone that enjoys to learn. I enjoy learning, and so I really want to learn everything I can about syndicating. And so as we're bringing people on, We're learning more. They're learning, again, educate, grow, give. That's where we are. We're educating others as we're educating ourselves. We're growing their investments as we're growing ours, and we're helping them give as we are giving also.
I love it. I love it. So then, as far as your buy box goes, whenever you're making an acquisition, that's the next question. And just so you're clear, when investors, syndicators, and whatnot are asking about what's your ideal property, what's your buy box, there are three main parts. First one is geography, which states, which counties, possibly even which neighborhood. Okay, it's going to matter. So geography is going to be a lot of what decides if it's ideal or not. The second one is going to be the size, and we generally talk about multifamily, or in other words, I talk to more multifamily syndicators in this show than other types of commercial real estate. And in multifamily, they go off a unit count to find size, and that's really important because you're going to have a different kind of group of people taking over 15 unit apartment complexes compared to the 150, 350, and whatever. So you need to know who you're working with here. So size matters. If you're industrial warehousing, different things like that, then it'll go off of square footage. But anyway, the third one though is class. And a lot of people use the word class for two different things. I like to parse it out for simplicity. The first one's condition. So is it an old building or is it brand new? Is it all beat up or is it in reasonably good condition? Is it really bare bones or does it have all sorts of luxuries? Okay, that's the first one. That's condition. Second one is area. And area, it's they're asking about a few things. One is like, what's the crime rate like where this property is located? It also has to do with how much traffic goes by. It also has to do with what the school districts are like, at least when it comes to multifamily, where there's going to be people living there. So both of those two meanings of class, area, and condition, they have the same rating system as in grade school, where you got A plus at the top and then A minus, B plus, and so on. So Bryan, as far as you and your guys go, what's the real sweet spot?
So, we started, right, just getting in a deal. We're in Middle Tennessee there, right? We got a couple of smaller units, right? Those were the first buys, and that was just kind of, again, shaking the fear off, right? Getting that done. But for us right now, the sweet spot is we like Tampa a lot, right? It's a great market. There we're targeting C plus B class. We want to have some value add on the top end. So, we have a deal that we closed back in December, working well there. We're also heavy on Columbus, right? So we like Ohio. The city is Columbus, and then if we want to drill down even a little bit more, we like Franklinton is a little town in there, or just a subset of Columbus. And then we have properties in Newark. And the reason there is there's a big Intel factory. I don't know if the audience has heard, but there's a $20 billion Intel factory going into the northeast corridor of Columbus. So there's gonna be massive growth there. And there's just a lot of need for investment there. Great people, we have solid team, boots on the ground, and they manage, the bulk of the properties, and, we manage the managers. So we like just that Midwest area. We like Middle Tennessee, Ohio, and then Florida. We're in South Florida, so Tampa's driving distance. Again, I can't get there in an hour, but we have people that are boots on the ground. These are people that have done over 1,000 flips, so they have local contacts. They know the space. And so we, again, part of that cube, we're building that team, right? We have the finance people, we have boots on the ground, we have the contractors. We can manage those teams because we have access to that. And one of the things, people that do have W-2s that are worried about going into this space, you're constantly building your toolkit, right? So, again, myself, I've been in corporate America for a while, so I know how to deal with, the high-powered attorneys and the bankers and all that stuff. And so I could either say, man, I've never done this thing, or I can say, I have some experience in talking with people that I don't know, people that, have degrees from amazing schools. And, you just kind of shake that off. And, when you first get in the room, you're like, I wonder if I'm going to fit. And you know what? It's not out of the league. I don't feel out of the league. On the contrary, I do believe we add value to the team, and to the point that they've called us for other stuff, right? And so, you do this enough, and you get to the point where you don't even have to shop you have to underwrite the deals for yourself and for your investors. But the reality is, you don't have to shop the deals anymore. They're coming. They're like landing on your desk, and you sit there and you pick the one that you want, right?
Yep, that's absolutely fantastic. Did you mention unit count in there, or did I miss it?
You oh no, sorry, no unit count. So we want to be 50 and up, right? So
15 up. Okay.
we have 40 unit that we're doing, and then I can't go into any specifics on any of
Right,
the
right,
other
right.
stuff. We're 50 and up. Yeah.
Yeah, yeah, cool, 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 perfect. And then the next thing that I got to mention is that, as far as people who are out there go, like commercial real estate, my favorite part, like you were actually just mentioning that, Brian, and which is just like how this all works and how people are so eager to help out and accepting, quite frankly. And I think it's because everybody who comes to this industry came here from somewhere, and it's really a different type of group of people, and it's really fantastic. And even though we're all eager to help each other, we still have one thing though, which is because we have a unique skill set, we're better suited helping some people more than others. Me personally, I got all the marketing and tech backgrounds. The sponsored KPs traditionally have been the people who have been trying to attract, just because they have enough of a foundation where a guy like me can make a disproportionately big difference. A guy who's sent 5 million emails a month for like 6 years and like $3.5 million in coaching every year. So that kind of stuff. But the other one too is locals. I'm always eager to talk to, especially on this show. If you're a syndicator or an investor or anything like that, be sure to schedule your chance encounter just like this. But Brian, as far as you go, who's out there who you can disproportionately well help, and try not to entice investors. So if you have
Yeah.
any candy or chocolate or donuts.
Yeah, I think where we really move the needle is on operations, right? So um again, I run a big team. My partner, he's heading a project that's like, I don't know, $300 million. And so we do have a lot of background in process management, project management, and workflows. And a lot of what we see in the room, and when we're talking to people on our teams, and as we go to different conferences and different masterminds, there's a lack of that, right? Just systems, right? Process. I love a good SOP, right? And so being able to map that out for people, it seems to be very, very helpful to them. And something as simple as a spreadsheet, a pivot table, minds are blown. And they have a specific skill set. Like, these are people that will do things that I don't know, right? And there's a quote from what was it? Forget the book. From F. Scott Fitzgerald. Um,
Yeah, I know.
I can't remember the name of the book. It'll hit me at 3 o'clock in the morning.
Yeah,
But in any case, there's a scene where poor kid, the poor guy, he's in a room with wealthy people, and they're questioning his intelligence, and they say it's something to the sense of, it's not that they know less than us. They just know different. And so I'm that to someone else, right? I don't necessarily know less than them. I just know different. And others, it's not that they know less than me. It's that they know different. And so you
right,
get a group of people like that. You make that cube. I mean, you're off to the races.
right, exactly. It was Gatsby, Great Gatsby.
Great Gatsby, yeah, yeah,
Yeah,
Great
bingo,
Gatsby. And
bingo.
so so being that for other people, right? And in a space like, you're massive into marketing. You're that for someone. It's not that the people that you're helping know less than you. They just know something else. And so when you come at it that way and say, man, together we can build this thing, it's great. It's great to be a part of it. And the community is super welcoming. Like, you'll run into knuckleheads, but the overwhelming majority of people, they just want to help. And it's probably my favorite surprise as I've gotten into real estate, is
Mhm.
the overwhelming sense of community that there is, and everybody's kind of in the boat, rowing the same way. And you kind of, everybody's got different boats, right? Some people have little canoes, and some people have big yachts. But you talk to the guy. If you talk to the guy with the yacht, he might help you out. You'd be surprised.
I love it. I love it. And speaking of talking, and let's get to reaching out. I've got this distinct last name, which makes me really easy to find. So LinkedIn is the best platform to find me. Just look for Dan Fredenberg. But I should mention, this QR code, if you scan it with your phone, it takes you to the FAQs page of 506B Me, and that is the platform where I offer the service of documenting your prior substantive relationships for 506B deals, which is, it's even a good idea with a 506C deal, because the backbone are these chance encounters. The idea being, it's like after you watch one of these videos, you can't say that you don't know what the person does. anymore. It's like, when you're really establishing core competencies, appetite for risk and all that kind of stuff, like I've demonstrated this to an 8-year-old before and they got it. So, that's that. But that's how you reach out to me. Bryan, how about you? Is there a website or through
Yeah.
social media or how should people reach out?
Yeah, so we're firstgenfoundations.com. That's our website. We have our investment thesis there. We have write some articles, about us. Contact us there. Big on LinkedIn. Been really just diving into LinkedIn and just trying to post more. On Instagram at First Gen Foundations. And we just, again, our goal is to educate. So we post every day, Monday through Friday. And again, it's just to get the education out there. We're going to start posting stuff in Spanish, right? So we do there's a huge market out there for people that either don't speak English or receive information better in Spanish. So, we have a system where we're set up with people that can translate legal documents. You have people that, again, they're signing massive checks and they can't read a document. And so they're taking the trust of someone saying, yeah, everything's kosher here.
Mm.
Like, whoa, it's 2023. Like we can translate this. And so again, just trying to help people out and all that stuff comes back, so we're excited about it. And, there's a great, audience for the message.
I love it. I love it. So then the last thing then is not for you, Bryan, it's for you in the audience, which is it's a public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, like migraine-like symptoms, all that kind of stuff, it's not a computer virus. It wasn't me. It's probably the subscribe button that's there. It used to be a hideous red button but I like to draw people's attention to it because if enough people hit it, then YouTube will actually start paying for these videos instead of me. I think that would be amazing. And as far as the trade-off for you, it doesn't cost you anything. It won't ask for you for your credit card or any of that kind of ridiculousness. All it means is my videos might show up on your list of suggestions though, but you can go ahead and ignore those suggestions. I just really appreciate the fact that you spent this time with me, just like Bryan. I appreciate you joining me today. This has been great getting to know you a bit better.
My pleasure. I appreciate it. Thanks for the time.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.